Good morning, guys. Welcome. CPI data, inflation. Inflation is coming down. It was transitory. We're back, baby. Good morning, guys. How are you today? So CPI number came out. They said that the let's just pull up the story here. The market reaction was so funny to this. Consumer pricing index rises 5.3% year over year in August in comparison to the 5.4 estimate. So everybody's celebrating. It's funny, if you looked at the futures this morning. Well, if you looked at the futures last night, they were up like 174 points. No, maybe it was 74 points. I can't remember. Then you checked in the middle of the night and they were down. You checked at 8:15 and they were like, man, I don't know, minus 75, minus 100, and then all of a sudden CPI data comes out and everything's just fine. So these people are scam artists. That's all I got to tell you. All you have to do is just keep going around. Guys, I went out to dinner yesterday with Nicole, Paul, and someone else. I don't know if I'm allowed to say it. But anyways, we were driving there. We were driving through one city. It's Twinsburg, Ohio. 6 signs that said, "We are hiring." And I'm not saying it's just gas stations and restaurants. These were like legit businesses. There were medical spas. There were shipping companies. FedEx was one of them. They have a massive plant there. So if anybody wants to tell me that the economy is doing great and all of this and that, you're full of it. You're just absolutely full of it. I have nothing else to say to you. I can't even have that conversation with you. So let's get into some stuff today. Let's start with my favorite person in the whole world, Kathy Wood. She's at it again. So this is great. Let's look at this. She's talking about NFTs, or is it NTF? What is it? NFT or NTF? NFT. I was walking when I heard the CEO tell his story. This was on CNBC with Andrew Ross Sorkin. And my smile went ear to ear because I said, man, this is going to be explosive. This is how I felt when the internet first came out. When the internet came out. She's comparing NFTs to when the internet came out. Meanwhile, Wood says she expects Bitcoin price to top 500,000 in the next 5 years. What a bear. Come on. My price of this was over $2 billion by the end of this year. If we're right, the companies continue to diversify. That was sarcasm, by the way. If we're right, the companies continue to diversify their cash into something like crypto, and institutional investors start allocating 5% of their funds towards crypto. We believe that, so this is the absolute best situation of all time. We believe that Bitcoin's price will be tenfold of where it is today. Bitcoin is reasonable, blah, blah, blah. Wood said that she would allocate 60% of her money to Bitcoin and 40% to Ether. And ARK has created this investment where I guess they're going to have their own ETF, Bitcoin ETF scam under the name ETF. This should be illegal. They shouldn't be, just because it's a conglomerate of stock, they need to come up with a name for this. Maybe like BS ETF or something like that. Just a thought. Next, Amazon. So it's funny. It's really funny out there. If you just let these private businesses do their own thing, they're already paying over $15 an hour. It's really strange. I don't know. Anyways, Amazon hiked its average starting wage to $18 per hour on Tuesday and said it plans to hire more than 125,000 warehouse and transportation workers in the United States. I think this is just coming off of last month, something like that, where they said they were going to hire like 125,000 people or something, 400,000 people. I don't know what it was, but they're hiring like nobody's business. I got to figure out a way to better set this up so I can read comments. I'm just looking side to side, and I feel like I'm neglecting you. And you probably want me to look directly at you, but I can't. I'm going to have to figure this out. I'm standing at my new desk, and I like the standing aspect. I just don't like the setup right now. The world's largest retailer said it would also pay a sign-on bonus of $3,000 in some locations, and hourly wages could go up to $22.50. Amazon was among the first few retailers to set a $15 an hour minimum wage in 2018. Amazon said in May that it would pay an average around $17 per hour. So if you're one of those, if you're looking for a job, there's 125,000 new ones out there for you. Where are we going next? Baba. This is an interesting one that I saw last night. And of course, it concerns a lot of you because, well, I'm sure you're invested in it. So everything's still going on with these Chinese regulators and such. So there's a report that came out that Chinese regulators are now trying to tighten up their stronghold on Alipay, which is the payment system that goes through Alibaba. I think, if I remember correctly, it's something like to the likeness of a square. I don't know if I might be speaking incorrectly. You guys correct me on that. I just can't remember what Alipay is exactly. I know it's a payment app. I know that. But I don't know if they actually have physical devices that they put in stores and stuff. But Beijing is looking to create a separate app. So the country is looking to create a separate app for Alipay's highly profitable loan business, which is currently controlled by Alibaba, the founder of Alibaba. And that's according to the Financial Times. Last part, the plan will also see Ant Group turn over user data and underpin its lending decisions into a new credit scoring venture, which will be partly state-owned. So it's no surprise. Basically, when you come down here, Beijing has been looking into rein in internet and technology companies because it feels that it has circumvented rules and regulations, which were incentivized by the Chinese Communist Party, and now they're going after them. So Manish Pabrai, I listened to an interview with him, and he said it very well. He said, Chinese companies in China, what they tend to do is innovate and then regulate. And that's kind of what's happening right now. If you look at the United States and Europe, it's more like regulate and then innovate. So you find out the rules and then you go and then you innovate. But over there, it's innovate, kind of incentivized by the government, and then they regulate in the end. So to me, it's not that bad if that is so the case. Google Pay clone. Yeah, it's like Apple Pay. Okay, thank you very much. Thank you very much. So Alibaba is very much like Apple Pay, so it's not like Square. My bad. All right, next, let's look at Oracle. So I know you guys like to look at Oracle. Let me get rid of this. There we go. So after a company missed revenues yesterday, their shares have risen 40% this year, The continued revenue forecasts are expected to be higher. And Oracle said its two new cloud businesses, software as a service and infrastructure as a service, have made up 25% of the company's total revenue with annual run rate of $10 billion. Yeesh. Total revenue rose 4% to $9.73 billion in the quarter. So they're off and running. So keep an eye on Oracle if you would like to. We did CPI data. Let's do, where's the next one? Excuse me. Okay. Big investors are starting to get worried about a crash. So global growth expectations have continued to fall markedly in September. It's funny. I was thinking about this morning in the shower. I do a lot of my best thinking in the shower. I just keep thinking about that COVID fall back in February, March of 2020. Literally the fall was because people were thinking that, maybe I could just draw this. I mean, I'm sure you guys know this, but when you really think about it, it's insane. So we're gonna say February and March of 2020. The fall happened, the stocks fell 38% because people were saying that exactly what happened with shutdowns and businesses, this and pipeline issues and that was going to happen. Stocks fell 38% because of that. When it got to that level of shutdown and supply chain issues and whatnot, stocks went up like 100%. What the hell what is this? I mean, when you really think about it that way and you lay it out that way, you have to think to yourself, what? Basically, everybody said what is going to happen is going to destroy the economy and businesses and the stock market. Then it happened. Then it continued to get worse, but the stock market continued to get better. Doesn't make any sense when you just think about it very logically and use some uncommon sense. Growth expectations for the market are at their lowest level for businesses, for the economy, are at their lowest level since April of 2020. Expectations from economic growth plunged 14 percentage points from Bank of America's August survey. And the report said macroeconomic optimism is tanking. Lackluster jobs report added to that. People concerned about the Delta variant impacting very large companies. Profit expectations are at their lowest level since May of 2020. The bottom line for us, the risk reward is not particularly great in the index level from here, no matter what the outcome is. That's why we don't have any upside for the S&P for the rest of the year. Yikes. RIP S&P. All right, last one. I'm gonna talk about this uranium thing because people are talking about it. I want to pull up this Discord because I was talking to Cash this morning. Cash is in the industry. So basically, uranium has just soared over the past, I don't know, call it 2 weeks, month, I have no idea. But a lot of it is from these retail investors that are just going in and pumping up uranium. So this guy says, while coal and natural gas are driven up by actual market tightness, uranium's underlying supply-demand fundamentals haven't meaningfully changed over the last few months to warrant the price surge. So Cash has been saying this for a long time, especially to the day traders. This is more of like a pump and dump. Because the supply and demand is fixed. The commodity is not openly traded, plus the government itself is a major source because it's dismantling old nuclear weapons. Generally in power plants, they need 14% enriched, but weapon-grade nuclear weapons have 80%, so quite a bit of dilution allows for it. So the biggest thing to me is the supply-demand. It's controlled by the powers that be. So even this article is agreeing with that. But guys, go in and trade this thing and use the 15-minute chart. Have fun with it. I'm sure you'll do very well if you follow the rules. What's the market doing? Is it higher now than it was before? Nope. Sad. Guys, follow us on Instagram. For the record, I'm going to have a guest on the show on Friday. I'm going to have the CEO of Crossroads Group. He's the CEO of 8 or 9 businesses. Maybe he doesn't know how many businesses there are. But Mikey's going to be on the show. Paul's brother, one of my favorite people in the world. He's going to be on the show on Friday, 9 o'clock. We're going to go over exactly what Crossroads Group is. We're going to talk a little bit about real estate because that's mostly their world. and it'll be a fun show, and it'll be different because I've never done an interview before. So good luck to you watching it and enduring it. Just kidding, it's going to be good. That's that. Okay, let's see what the yields are doing. Yields are just sitting, basically not doing anything. Earnings calendar today, fuel cell reports. I did not know that they were still around. And if you want to join the software and be a subscriber, $7 a month, guys, gets you into the Discord with 5,500 people. If you want to get the software and Discord access, $27 a month. If you want exclusive tier, how do I say this? Exclusive Discord channels, $77 a month gets you that with me. We're going to do a lot of trading in there. We talk options, we talk value, we talk everything. Bid and ask after hours is great. This goes up every single month. This goes up every single month. This does not go up every single month. And then, lastly, you get all of the software. Stock Analyzer tool. 8 pillars. It's incredible. $750 for 1 hour with me. If you want to do a session with me, I've had multiples. I think I have one tomorrow. And then if you want to do a real estate deal with Paul, $10,000, 1 hour gets you that. And if I'm going to say it every single day because it just makes sense to me. If you're going to do a deal where it's your first real estate deal, or you're doing a deal in this market and you want to make sure it's right, I think it's wise to consult with somebody that knows what they're doing. So, all right, send me some stocks. We'll have about 15 minutes to go through some stuff, and we will go from there. My experiments with your morning show and CEOs, it's not good. I don't know what that means. Let me see if I can use this screen. Okay. Where are we here? Longer market open. I don't know what that means. Will we ever get a TraderMo and StockMo collab? Well, the difference between me and StockMo is StockMo uses a 5-minute chart for 5-year plays, and I don't. So I just don't know how well we're going to mesh together. I'm sure he's a lovely man, and I guess I would pet his cat, but I don't think it would be a very good collab. Paul is worth like 1 Bitcoin. That's a good one. Cigna, yeah, insurance is tough for me. Didn't I say 4 hours? If you want to pay $10,000, it's 4 hours for Paul, $2,500 an hour. Okay, we're starting to get some stocks. Let's look at these. AMD. Why don't we look at AMD first? So AMD I remember they had a long flagpole on them, and they pulled right back down. So they've stabilized. So basically, flagpole patterns, they always pull back. And what we're looking for, if you're new, what a flagpole is when you get a line that just goes straight up like this, there's no support in here anywhere for it to fall back down. So it will likely fall halfway, if not the whole way. So what you do want to see are movement like that. So that's why we like pullbacks in stocks. We don't like to see stocks that just go straight up like AMD did. So AMD went straight up, and it went up just above $120 a share and came right back down to about $100 a share. So flagpole patterns happen every time they're tried, and that's that. What was I going to do here? I want to just give you some little insight. So you're facing resistance at the 25-day moving average. Just be patient on that one. Wait for it to make some engulfing candlesticks moving up, and you should be Gucci, as the young people say. Okay, zoom. Make my heart go boom, boom. My supernova girl. Oh, this is disruptive as can be. You know, video chatting is very disruptive. Video chatting came around in the early 2020. It was never a thing before that, and it was extremely disruptive. But disruption is over, I guess. So that is a hell of a gap down, and it just fell right down to the support area of about $300. So you can see that there's declining volume on it. You're still in a downtrend. So if you do get an engulfing candlestick down, you can go ahead and get in on that thing. But for now, I wouldn't really do anything. Maybe day trade it. I'm sure this thing has some pretty good volatility going on a day-to-day basis, but right now I wouldn't do anything. Okay, let's see. Corsair I did yesterday. DGX I did yesterday. Can you use the same strategy on OTCs? Absolutely. I would just recommend that you use the same concept that I say with close to 1 million shares traded. Just because when you get into things that are like 100,000 shares traded, etc., it's just you're setting yourself up for failure at that point, because somebody can go in there and buy basically 100,000 shares, and if you're short on that thing, you're going to get smoked, or vice versa. Let's see here. What were we doing? FTA. I have no idea what this is, but let's take a look. And it really doesn't matter what this is. So I like that I'm seeing increasing volume over the last 3 sessions. We're almost at a sweet spot reversal point. Get some engulfing candlesticks moving up. If you can you got to wait for 3 days here though, because with this up and down, there's zero confirmation of trend right now. Let 3 days of green happen and then move, and then add on an engulfing candlestick. Okay. Yep, Mo is a low-key Xenon Girl of the 21st Century fan. You're welcome. What a great show. Protozoa. FL. I don't remember the blonde girl's name, but she was cool. Guys, smash the like button if you don't mind. That would be wonderful. All right, let's see what's up with Foot Locker. So Foot Locker has dropped below its 200-day moving average. This to me is a value play, so I'm perfectly fine seeing this fall. Now, it's below the 200-day, which is not ideal. Let's draw a line across here and just see what we got. Let's see here. So there's not a lot of support going on in there, I'll tell you that much right now. If you do get a big engulfing candlestick down, you can go ahead and short this thing, but I don't think I would. I don't think I would. I think this is you're just getting too tight. That's the problem. How's your Tesla? Oh, okay, they told me yesterday that I was going to get my Tesla on between the 26th of September and the 30th. So hopefully I get it on the 28th and I can have it on my birthday, and then that would be pretty sweet. But knowing Tesla, what they actually mean is September 26th through 30th of 2040. ZAP. Zap, zap. Did that work? Zap. I don't have Zap. CPB. Campbell Soup. Let's see. Okay, so the good news about Campbell Soup right off the rip, I noticed that gap right there. So gaps fill 90% of the time, which I love seeing. So that's wonderful. Let me see here. Okay, there we go. So that's great. So if we can just get some movement on this thing, get some volume coming in. The good thing is if you really just take the average, the volume's there. So we haven't had big fall off, and we're not seeing volume down in this area. So that's great. I am happy to see that. But you're going to face a lot of resistance going into these 100 and 200-day moving averages. So just be careful with that. Be patient. This is a great-looking dog stock. Please keep watching it, and we'll go from there. Claude, thank you. You're welcome. Peloton. We haven't done that one in a while. PTON. I've been rocking uranium the past few weeks. That's what I said. Go and trade uranium. Day trade it. Have fun. You're probably gonna make a lot of money on it. Okay. So right now, if we just zoom out and just draw a line straight across, you can kind of see that this is a resistance point. This area right here, especially here, which is in February, and here, which was basically the summer. And that's pretty funny. If you just look over here, it's the 200-day moving average that you're facing with resistance. So what I don't like is you had good volume increasing, and then yesterday you basically had half of the volume, and it was all selling. So yesterday very, very well could have been some kind of short covering rally in some fashion. So let's see here. So you're technically a downtrend and you're starting to swing up, but you got to be patient. If you want to do something on a daily chart, if you can engulf out over yesterday's candlestick, you can get into this thing. Try to run it up to $117.50 or $120, but you got it. If I'm you, I'm using like a 3% stop, if not a 2% stop, just because that's a risky play. I would go find something else personally. Okay, how can you guys like Tesla company when it takes a year or more for delivery. Well, it doesn't take a year or more, but I've waited a year for my diesel truck. What does it matter? There's no doubt that they are just a complete disaster of a company in pretty much every facet. But they make cool cars, so it's fine with me. Spotify. Oh, Spotify is also disruptive. Music streaming didn't become a thing until about like 6 months ago. You guys know you can like pull out your phone and stream something? It's pretty sweet. You don't have to get a CD anymore. That's disruptive as can be. So that should be in a disruptive ETF in my opinion. So in the short term, coming down, you're going to face a little bit of support at the 100-day moving average and the 50. But going long on this, let the yellow line move into the sweet spot, break out, see if you can get over this 264 level. You're not going to be able to, I do not think you're going to be able to do anything with this from a long-term perspective until you break out over 264. And that's hard. I mean, that's hard to wait like that. Now, on a daily, I would just go ahead and just keep trying to grab little bits of this as this thing comes down. Grab that little bit right there. Grab this little bit right here. Grab this bit right here. So, you could have had a great $10 swing trade over the past couple days. So go ahead and do something like that, and you will be just fine. All right, let's see here. What else do we want to do? And I haven't done this one in a while. NCLH. Is this the cruise line thing? Norwegian, that's it. Okay, so I'm sure this is a 50%er. So all of our cruise lines are basically these 50%ers. So here's your high, here's your low, and here's that mid-range. And wow, that's almost perfect. So that's almost actually 50%. So what a 50% stock is you have your high, you have your low, and then you have this 50% area. Oh, you can't see that. This 50% area mid-range. And what that means is you get a massive fall like this, and these people that were in this up here, any point, they say, if I can just get half my money back or a little bit of my money, 30% of my money back, I'll be happy. So the stock price rallies up and it falls right back down because they take their profits and sell their shares. Runs back up, sell their shares. Runs back up, sell their shares. Runs back up. You get the point. So all of this is just negative pressure on the stock. And if you pull up anything, airlines, cruise lines, etc., you'll see that 50%ers are very, very difficult to get broken out and get going. So you're facing that with Norwegian. Now, the good thing is this thing is at $25 right now, and it can basically run to $35. So you can definitely get a run on this thing. Just be patient. Let this thing move into the sweet spot. It's gonna be a headache run for you. So you're gonna want to keep an eye on it. But I think it will eventually get up there. Okay. Let's see here. Roku. Let's see, Roku. Roku's another disruptive one. So back in 2010, a television was invented, and just a few years later there was this device called a Roku, and you plugged it into your TV and it streams everything for you. And I've never heard of anything else that does this. I've never heard of Chromecast or Apple TV or Amazon Play Stick or whatever. I've never heard of any of these. So this company right here, this is extremely disruptive. It should be in a disruptive ETF. Anyways, this thing right now is just getting beaten down. And what that means is it's just taking a break. It's getting its rocket launchers ready and it's going to go to the moon. So I would just wait and let this red line turn over, do some kind of sweet spot reversal, break through, get some actual volume coming in there like back in here. I mean, everything is a downtrend in this right now. So, yeah, that's Roku. Next, BBBY. Love Bed Bath & Beyond. They have such cool stuff. All right. So they got, these are interesting. So I don't know what was going on back here. Maybe short squeezes, I have no idea. But, man, with this one, you just got to be patient. You just got to be to me, whoever asked this question, I wouldn't even bother trading this one at this moment. Because right now, you're just a dog stock. And even over here, I mean, what I like to see on my daily is see how it comes down here and it swoops back up. And it comes down here in an oversold area and it swoops back up. What you're seeing right now is it's coming down here and it's going sideways. So I do not like to see stocks go, stochastics that go sideways from a daily perspective. I do not like to see that. So, okay. Next. What do we got here? What do we got here? Oh, HRL. I love Hormel. The Hormel thing is, what do they have? They got chili in a can. So good. So good. Oh my goodness gracious. Look at this. They've had a heck of a year, huh? Clearly aluminum cans are not disruptive. Or maybe they are. They disrupt your trades. So kind of the same thing that I just saw with Bed Bath & Beyond. You're just kind of down here, but also if you look over here, I don't like stocks that do this and stay on the bottom for quite some time. I like to see, let me pull up so remember this, guys. Remember how long these things have been on the bottom. Let me pull up Apple just to see how that one looks. That's not a good example because they're never down. What about Home Depot? No, shoot. Give me another stock. Give me another. Biogen. Why don't we look at Biogen? I'm sure they've had some. So even with Biogen, it comes down here and it swoops right back out. Comes down here, gets right back out. Comes down here, gets right back out. So even that was a little bit long, but you get to see. You see what I mean? I don't like things that just coast on the bottom. So let's look at Biogen. Okay, they're downtrend. I don't expect any good news to come out for this company anytime soon. So it's going to be a very hard long-term play for you. That's why I say that. It's sitting at the 200. I would wait for this thing to just pop up. I think you're going to get a good run out of this. It'll run back to the 100-day moving average because institutions will come. This is starting to become more of a value stock right now. They have a good pipeline. With the exception of their drug, aducanumab, it's a good pipeline. So I think this will get some positive sentiment. And from a swing trading perspective, let this pop into the sweet spot and go and grab it. I think you will do very well with that. If somebody wants to tag me, put the Biogen swing trade in the Discord and I'll do it for you. Hormel is disruptive in a different way. There's no doubt about that. Okay. What do we have next? You guys are disgusting. BYND. Oh, speaking of disruption, nothing speaks disruption like fake food. Well, it's not fake. Okay, sounds good. All right. So there's a lot of gaps. Even this gap has to fill. So let me draw it. Yeah, this gap is going to fill. So I would not be opposed to running a short on there until you get to fill that gap. That's not a bad idea. But in the meantime, I would go and grab this thing moving up through the sweet spot from a daily perspective. Yeah, I think that would be a good looking trade. So, all right, the stock market is open. So what do we got here? Let's see what we got. Is the market still soaring to insane levels? Oh, it's pulling back. Dang. What do we got? Give me one more stock. I'll run through it. Then we got a lot of, I'm going to do Pinterest. Then we have a lot of recording today, live stream at 2 p.m. for you guys. Me, Paul, and Sethla. All right. Gap's going to fill. I promise you the gap's going to fill. Just got to get moving. I mean, look at this. Guys, if you look over here, I'm giving you a hint. What's the major issue here? It's volume. Volume is the only thing with Pinterest that you're having issues with. So this thing, just let it get moving. And the good thing is you have a massive distance between the 25 and the 50-day moving average. So once it gets over the 25-day moving average, which it's been trying to do for the past maybe 10 sessions, it will get going and it will start moving. So, all right, guys, that's it for today. You guys have a wonderful day. I will see you at 2 o'clock. I will see you back here in 23 and a half hours. Go make disruption.